Hi, my name is Yong-Lee. I'm a professor at Handong Global University. I belong to the Graduate School of Management and Leadership. Well, my academic background is I was graduated from UCLA, getting a bachelor degree, and I got the MBA from the University of Southern California. And then also I passed the CPA exam a long time ago. And after graduating, and I got my career opportunities. I used to be a CEO of a Best Chemical Corporation, and which is a petrochemical company. And also I used to be a CEO for the Bruin Electronic Company. It is an electronic assembling company, assembled for IBM computers, and also I used to be a senior partner for Maxim consulting firm. The subject I am going to lecture today is understanding of financial statements. And there are about 5 sections I am going to lecture you. Number 1 is, what is accounting? And why do people need to know about accounting? Simply, they want to understand what's happening financially inside of the organization. And accounting is the financial information system that provides these insights. In short, to understand the organization of any type, you have to know the numbers. So second, I'm going to talk about the building block of accounting, which contains accounting standards, measurement principle, and assumptions. The third one is a basic accounting equation. Assets supposed to be equal the sum of the liability and the equity. And number 4 is using the accounting equation. I'm going to lecture you about the transaction analysis and the summary of transactions. Finally, I'm going to discuss with you about the financial statement, how you are going to make a financial statement. The financial statement, there are 4 statements. Number 1 is an income statement. Then you are going to make a retained earnings statement, and a statement of financial position, and a statement of cash flow. Now, what is accounting? The accounting consists of 3 basic activities. It identifies and record and communicate the economic event of an organization to interested parties. Well, let's take a close look at these 3 activities. As a starting point to the accounting process, a company should identify the economic event, which is transactions, relevant to its business. Example is Samsung Electronic. They make a handphone, and they sell a smartphone to the public and the customers. That is identifying and transactions. Number 2, once a company like Samsung identifies economic events, it records those events in order to provide a history of its financial activities. It consists of keeping a systematic, chronological diary of events measured in monetary units. Finally, Samsung communicate the collected information to interested parties or interested users by means of accounting report. The most common of this report we call financial statement. Then, after identifying and recording and communicating, and the vital element in communicating economic event is the accountant ability to analyze and interpret the reported information. Analysis involves use of ratios, percentages, graphs, and chart to highlight significant financial trend and relationship. And interpretation involves explaining the uses, meanings, and limitation of reported data. Well, then, who uses these accounting data? There are internal users and external users. The internal users are such as human resource department, or finance department, or management department, or marketing department, which are in the organization, inside the organization. Those people are looking for this financial statement. And there are external users. External users, two common types of external users are the investors and the creditors. Let's talk one by one. Let's talk about the investors first. Investors uses accounting information to make a decision to buy, hold, and sell ownership shares of the company. And next one is creditors. Creditors are suppliers or bankers. They use accounting information to evaluate the risk of granting credit or lending money. Obviously, these investors and creditors are they keenly interested to scrutinize the financial statements. And then also taxing authorities. Well, our Internal Revenue Service in the United States, they want to know whether or not the company complies with a tax law. And regulatory agencies. Regulatory agencies are Security Exchange Commission of USA or Federal Trade Commission of USA. They want to know whether company is operating within prescribed rules. And then customers. Why customer needed financial statement? So everybody wonder why customers. Customers interested in whether a company such as Hyundai or Samsung or Toyota will continue to honor their product warranties. In case, let me tell you the story, long time ago, early in 60s, American Motors filed bankruptcies. So the customer who purchased the automobile from American Motors, there is no way they can guarantee, they can have a warranty in case, their automobile has something wrong. So that's why customers, they are keenly interested in about the company's financial statement. And labor unions. Well, labor unions, they are keenly interested and whether the wages and the benefits to union members are going to be paid or not. So these internal and external users looking for the financial statements. Some questions asked. For example, can we afford to give our employees a pay raise? Well, who are the most interesting about this? Can we afford to give our employee a pay raise? Obviously, well, labor union, human resources, and also some other departments, they are looking for these kind of things, but particularly human resources, they are keenly interested about this one. Number two, did the company earn a satisfactory income? Obviously, all the users, whether internal users or external users, they are interested about this one. But among all the parties, the investors, specifically investors, they are concerned about this one. So that's why if company makes a loss of the higher income, net income, and they are going to make a decision whether they are going to buy more of a company's share or something like this. Okay. Should any product lines be eliminated or added? Well, the management team, they are really interested about this one, and is cash sufficient to give dividends to shareholders? Obviously, well, investors are needed to know about this information, but the finance department of the organization, they are keenly concerned about this one. What price of our product will maximize net income? Yes, marketing department. Marketing departments, they are keenly interested about this one. And the last one, will the company be able to pay their debts or obligation? Of course, creditors, they are concerned about this one. Okay, let's talk about the building blocks of accounting standards. Well, in order to ensure high quality financial reporting, accountant present financial statement in conformity with accounting standards that are issued by standard setting bodies IASB and FASB. IASB stands for International Accounting Standard Board, and FASB stands for Financial Accounting Standard Board. Okay, about 130 countries follow standard referred to as International Financial Reporting Standard, which is IFRS, which determined by IASB. And located in London, also is 15 board members are drawn from around the world. And the other one, most companies in the USA follow standard issued by Financial Accounting Standard Board, referred to as Generally Accepted Accounting Principle. Well, in order to increase comparability in recent years, the two standard setting bodies have made effort to reduce the differences between IFRS. So this process is referred to as a convergence. My opinion, I think IASB and FASB, within 3 or 5 years, they are going to converge. So there will be only one standard about 3 or 5 years later. Let's talk about, we have a few principles. The cost principle, or historical cost principle dictates that companies record asset at their cost. This is true not only at the time the asset is purchased, but also over the time the asset is held. Let's talk about the fair value principle. Fair value information may be more useful than historical cost for certain types of asset and liability, such as investment securities. The market value information is readily available for this type of asset. For example, if you made investment in General Motors, and most of the people, they concern about what is the current price of the General Motors stocks. Okay, so fair value, it is much easier for you just to look for the columns or pages of Financial Times or Wall Street Journal. There is a quotation of each company's price, today's price. So today's price is a fair value. So fair value is much more valuable or useful than historical cost. Well, and then also accounting standard use assumptions. Well, monetary unit assumption means it includes in the accounting record only transaction data can be expressed in money terms, not the barter system any longer. Money terms such as US dollars, Korean won, Japanese yen, or Chinese yuan, or the English pound. Those are monetary unit. And then also there is an economic entity. So economic entity requires that activities of an entity be kept separate and distinct from the activities of its owner and all other economic entities. Well, there are three forms of business ownership. One is a proprietorship, the other one is a partnership, and a corporation. Well, let's talk about the proprietorship. Proprietorship, or you can call sole proprietorship, generally owned by one person, and often small service type of business, and the owners receive any profit, suffer any losses, and is personally liable for all the debts. That means that it is unlimited liability. Whenever you open your proprietary enterprises, you have to pay if you do have the loan from the bank. And the partnership owned by two or more persons, and often retail and service type of business, and generally unlimited personal liability, same as the proprietorship, and there is a partnership agreement. And the corporation, ownership divided into shares, and separate the legal entity organized under corporation law, and it is a limited liability. And the characteristic that distinguish corporation from proprietorship and corporation is separate legal entity, limited liability of shareholders, transferable ownership rights, ability to acquire capital, and continuous life, corporate management, and additional taxes. Additional taxes means a double taxation. Corporation pay their income tax, and then also after the distributing dividends to shareholder has to pay tax too.